Let's just jump in to marketplace lending. This should be pretty quick, and then we'll get the really smart people out here. So if we can get to the slides. This is us, which you know the discussion. All right, so this is traditional lending, right? Can you get the monitor on? Kind of the process, sort of slow, cumbersome, inaccessible. And then the promise of sort of marketplace lending came on, and this is a graphic from Prosper. Kind of, is there a way to use technology to connect borrowers with lenders? And so it's initially sort of began as sort of person to person, and I think it's obviously evolved with more sophisticated buyers, or borrowers rather, on these platforms. So this is kind of the promise of marketplace lending. And what we're seeing is, again, using sort of this trends tool that we use, you see peer-to-peer lending kind of used in multiple verticals now. So it's not just consumer lending, it's small businesses, it's student loans, it's auto loans. So what we're seeing with this marketplace model is a sort of proliferation across a variety of now kind of lending types or credit types. So, it's obviously the purple line is the consumer lending side, which is the most prevalent today, but we see the model is starting to get into other areas. Even, sort of our regulators here in the States have kind of recognized the need for this the need for these marketplaces and the access to credit that they bring. It's the lifeblood of the economy. It's helps with economic growth. So I think everybody sort of bought into this idea. What you see is kind of massive growth. This is on the personal loan side, so this doesn't include sort of the SMB side of things. Massive growth in the lending platforms over time. This is the top two kind of consumer marketplace platforms and their originations at $10 billion in 2015. So again, really eye-popping growth. And you see kind of over many cycles, there have been unicorns who've come into being. Some of them have gone public. That's sort of the good news. There are some headwinds in this space, and so as a result, what we see is kind of when you look at the funding tally and the deal tally, in early 2016, the number of marketplace lenders who've been kind of funded has fallen off pretty dramatically. And part of that reason is headwinds in the public market. So when we look at OnDeck and Lending Club, you can see that obviously in their stock price performance. So, these are things that give people pause. And then there's obviously sort of, well-documented sort of governance concerns that have come up recently. We've seen some smaller players folding, and then then there's sort of this view that from OnDeck and Noah at OnDeck, that we're sort of in the late innings. Is there room for new players? So is the field too crowded? So kind of an interesting view there. And then there's these concerns about the underlying business model, and so I think it'll be interesting to see what the panel has to say. But a lot of these businesses were born in a very favorable sort of interest rate climate and a very mostly favorable economic climate. How do they weather the storm if that turns? So kind of with all of that said, it's worth remembering that this is a giant opportunity, right? Marketplace loans, are projected to be $150 billion. So massive opportunity. Talked about this earlier, just because there will be casualties doesn't mean that it's not a great space. So this is, again, taking that e-commerce example from earlier, lots of casualties. Again, there's going to be a handful of big players, and we don't expect marketplace lending to be any different, but, it's a challenge market right now. And then we see this marketplace model expanding into other areas. So student loans, I think when it originated, it was sort of consumer loans and then for debt consolidation and working capital for small, medium-sized businesses, and now we've seen it expand into other areas. So this model, a more efficient model of getting lenders and borrowers together, is one that's now getting into real estate and student loans and other areas. So kind of open questions, and I know John has probably better ones, but here's kind of what's happening from a regulation perspective. Who's going to do this, and is there clarity in the market around what's happening, and then sort of applying the model. What's next? What are the other categories within financial services that the marketplace model can be expanded into?